Good evening, everyone. Welcome to Hit the Bid on August 23rd. This is Ty Robbie with your Week 34 Market Watch. Today we're going to run through our charts and see what happened in these markets last week and see what we need to be ready for as we head into Week 34. So let's jump in and get started. First up today, we got our October live cattle on the board. Last week, we continued to see this cattle market battle it out. We ultimately saw some lower prices in both live and feeder markets, but we continue to see the bulls fight back in the face of some bad news. Last week's action opening up here with some nice early rallies above that prior Friday's high. This market did develop some nice support there right around 218 throughout Monday, Tuesday, and Wednesday session. Nice bullish breakouts off those opening ranges, pushing this market up here to this 220 to 222 area. However, those sellers were just weighing too much here on this market, and ultimately we saw Wednesday's action break down below that 218 level, which led to these lower prices. Thursday continuing to slip down there below 218 before settling back right there. Then Friday morning we got that news from the White House regarding beef prices and some beef imports that kind of shook things up. Friday we opened up here at 214, saw some early downside, printing a new yearly low at 212.67 before seeing a nice strong rally into the close, finishing the week right there just shy of 218. Once again, a key level that we keep seeing price come back to. At the moment, we continue to see the last two Fridays here, we've seen some pretty bearish announcements that this market has bought back up. We continue to slip here. Last week's action losing less than $1 here for this October live contract. We did see more downside in that feeder market, but we are seeing this market try and hold on to this 215 to 220 area, showing these bulls are still trying to stay alive here right around this demand zone we created in the late part of 2025. As we head into the week ahead, we still have this big picture downtrend intact, so the sellers still remain in control, and we expect to see that bearish pressure continue to weigh on this market. However, here in the near term, we've seen some nice bullish responses in the face of that bad news, so we want to see if these bulls can continue to defend this mid-210s area up to 220. We need to see some early bids next week above 218, and we could get that relief rally underway, get this market moving back up here into the mid-220s, but we expect to see some resistance up here as these moving averages are coming down on price from above. Look for this market to try and rally early next week up here into the mid-220s, but those sellers still remain in control. We need to get some nice bullish pressure back here above 226, reclaim that 50-day average and break out of this downtrend channel before you can really start thinking about some sustained upside. Here in the near term, though, we are a little bit oversold, and we are kind of seeing some volatile action over the last week to 6-7 days here. This market has seen some nice downside, but we want to make sure these bulls can continue to defend this demand zone that was created in late 2025. We continue to see some nice heavy volume days with some good buying pressure, so we want to make sure that the bulls can defend that level. If we can see this market push back up into the 220s and ultimately eventually build a higher low here, or see some nice structures, this market trades sideways, that's something we need to see from a bullish case. In the meantime, though, we expect to see the bears continue to push this market lower. We need to see this thing stabilize, form some nice structure here, and get some traction back above these major averages before we can start thinking about any sort of uptrends or sustained upside. But the bulls are putting up a nice little response down here, and we want to make sure they continue to defend these areas. Any offers back below 215 could open the door to some more downside, and we could see this thing continue to push down here towards that $2 mark. But in the near term, this market looking like it's just a little bit oversold, and Friday's response to that news showing that the bulls are still alive and well and trying to get this market rolling higher. Bulls have a chance to take this market higher early next week. Look for them to put up a battle early. We need to see some pushes back above these major averages before we can get comfortable on the long side. This market still remains under fire here, so be defensive. Keep a tight leash on things if you're playing to the long side, and or at the very least get out of this thing and wait for this market to stabilize and have some a little bit better structure here to trade around before we really commit to any sort of directional moves. In the meantime, the downtrend still remains intact, and look for some resistance back up here in the mid-220s. We need to clear back above these levels before we can start getting bullish, but in the meantime, continue to be defensive here and let this market stabilize before we really commit to a directional move. Next up, feeder market, seeing a little bit more bearishness here last week compared to that live cattle market. This October live contract for the week only finished about 80-90 cents lower, while we did see this feeder market losing between $6 and $7. The September contract did bleed back down here below that 328 bear pivot last week, following that news on Friday, but we did see a nice bullish response here as this market did close back up there at 328.5, but we continue to see some bearish pressure last week. Early bids trying to hold this market up here in the 330s just wasn't enough, and that we did see this thing eventually break down into that big news we saw Friday morning. But like I said, nice bullish response there. We want to see these bulls continue to defend this 328 area. We continue to see some probes of it, but we continue to close back above it. So the bulls are still trying to fight back here. Still got a lot of work to do before we can start talking about any sort of sustained upside, as we still have this nice little downtrend shaping up here and a lot of resistance up here at these major moving averages. So it's not going to be an easy climb out of here, but the bulls have a chance to try and put in a tradable low here and try and get this market to stabilize and ultimately try and get back on track to the upside. Last week, we did see rollover out of the September contract and over into October 26, so the levels remain the same, but the numbers are a little bit different. Bull pivot for next week is going to be Friday and Thursday's high here right around 324.42. Bids above that level should try and get this market with a little bit of a relief rally, pushing back up into the 330s and eventually up to 340. That's the goal here. We need to see this market get back up here to this 340 area and this 50-day moving average. That's going to be a key level before we can start talking about any sort of a sustained upside for this feeder market. So we got a lot of work to do, a lot of room to make up here, but this market has a chance to put in a tradable low. Continue to be defensive down here below 319, which is equivalent to September's 328 level. As long as we remain above that thing, we should see this market try and get a little bit of traction, or at least a relief rally up here into these major averages. The downtrend still remains intact, so continue to be defensive and keep a tight leash on any sort of long positions, as the sellers still remain in control and have the wind at their backs, but the bulls need to continue to battle down here and try and get this market back on track to the upside. Next up, December corn futures with some nice strength last week. We did see this market with a little bit of resistance here around 492 early before seeing a nice strong push right up here towards 510, 509 being the high last week late, and we are already seeing some nice bullish upside here in the evening session on the Sunday night open here. Nice gap open here above that last week's high at 509, running up here towards a new contract high of 522 for this December corn contract. With that being said, this opens the door to the upside. We could see this volatility start to pick up here and see this market continue to press. We've cleared a lot of this overhead resistance that we've been in for the last couple of years, and so we should see this market take a nice little spike up here towards $5.50. At the moment, we are seeing some nice bullish momentum. If we do get back down here below 509, look for this thing to start to fizzle back out and come back down into this $4.50, $5 range. But the bulls have a chance to take it and run with it here early this week. We'll see if they can keep that going early into the AM session tomorrow. Bulls have a chance to strike. We'll have to wait and see if they can get that thing back up there towards 5.50. But with tonight's open, that opens the door to them. So we'll have to wait and see how this market unfolds in the week ahead. But the bulls have a chance to take this thing and run. So look for these corn prices to continue to move up here early in the week ahead. Next up, crude prices, seeing some more upside last week as well. However, we continue to see volatility fizzle out. Nice tight daily ranges here as this market moves back up here towards 87.5. We did test that 87 to 87.5 level a couple times late last week, but just couldn't quite get a nice strong close above it. So far here tonight, we are seeing this market push back down here below last Friday's low, which is going to be our bear pivot. At the moment, this market still remains in bearish territory as long as we are below 87.5. So look for this thing to start to fizzle back down here towards 80 to 75 bucks. Not expecting a whole lot of big directional moves out of this thing. If this thing does continue to bleed lower, it should just be a nice steady drift to the downside. Any sort of spikes back up here above 87.5 on heavy volume should get this thing up here towards 90 to 100 bucks. But until we can get a nice solid close above there, look for this thing to fizzle out. Next up, equity markets seeing a nice structured pullback last week. Each of our indexes seeing a nice steady pullback to the major averages after seeing some new all-time highs in the Dow and the S&P. The Nasdaq continues to lag here, but we are trying to put some pressure on that 30,000 level. This market pulling back last week, trying to find some support in those major averages, along with the S&P finding support at the 20 on Friday. The Dow also kind of dipping down there towards the 50, but seeing a nice response there on Friday, pushing this thing back up. Each of our indexes all finding some good support at those averages last week. This market recently pushed up in some new all-time highs after a couple month long consolidation period. This is looking like the first pullback and a new breakout here, so be a good time to start looking for deals out there and discounts. Start putting that money to work. This thing should offer a nice little buying opportunity here in the week ahead. If this market continues to stabilize here on these averages, we should see this thing continue to balance out and eventually be a nice buying opportunity. We need to maintain that 50-day moving average to keep this uptrend intact. So we got good looking pullback pullback opportunity here so far. We need to get some bids above Friday's high across each of these indexes to really see that upside continue. Each of our big pieces of the puzzle here all pulling back last week and seeing some nice supportive action, good balance action here in a lot of these mega cap names, showing that we got some chance or a pretty good chance for a rally in the week ahead. So look for the bulls to come out swinging early in the week ahead and try and get these markets moving back towards those all-time highs. That's all we got for tonight. Thank you everyone for tuning in. We'll catch you guys tomorrow night for closing comments.